A crash beyond compare is heading our way. Its impact will be severe, and it is no longer a matter of if, but of when it will strike us, for the point of no return has since long been passed. But what can we really expect from Bitcoin once the party is over and markets crash in what economists have long referred to as the everything bubble? Should we expect Bitcoin and precious metals to just immediately take off, or what is really in the cards realistically? Bitcoin is often referred to as digital gold, a blockchain-based store of value whose deflationary characteristics in combination with the network effect, as in where the value of it increases exponentially to that of the number of users, are thought to be a great hedge against any fiat currency devaluation or market crash. Just like gold, whose intrinsic value has proven sustainable for thousands of years and whose spending power remains somewhat intact, a safe haven when entire states or fragile economical systems falter. Now, it should certainly come as no surprise that the global economy is down the drain, and that's putting it conservatively. For just because the stock markets are rallying, it doesn't mean the economy itself is in good shape. For as mentioned in this episode, it's got all the diseases you can think of at the same time and will soon pay the price for it. Now, it's no coincidence why many serious investors have historically held small portions of gold in their portfolios. This is not because gold will rise in value per se, because technically it won't. What it rather does is to maintain its spending power as fiat currencies inevitably and ultimately always approach their intrinsic value of zero. For think about it. Can you name one single currency that has been around since the 1800s in its current form? You may mention the British pound, but the British pound was in itself recently subdivided into shillings, farthings and so on. For it's rather recently that it's adapted its current form of just pounds and pence. New systems come and go, and I'm talking about a currency that has existed since at least the 1800s, if so only since 1899 in its current form. In this sense, gold is more of a hedge against inflation than it is a hedge against market crashes. And we can see this clearly on various charts on which gold versus the strength of the US dollar reflects something close to a mirror-like relationship. But when we compare gold to stock markets, any correlation is much less palpable. Surely there are certain patterns, however much of them come down to altered interest rates, which in turn affect both the inflation and company stocks. Simply put, this complicates the hedging effect itself, and especially the predictability thereof, as a market crash in itself won't automatically trigger rising gold prices. The 2020 Corona flash crash is a prime example of this, during which gold lost around 15% of its value in just 2 weeks. A huge move for an otherwise slow mover like gold, and during which Bitcoin lost minus 63% in a month leading up to the same abyss. This recent phenomena will likely puzzle many inexperienced retail investors and discourage them from seeking refuge in either gold or Bitcoin, as their respective failures to hedge during such a recent scare did anything but convince them of their safety net capabilities. And this perfectly proves my point of how gold and Bitcoin as hedges should not be viewed from the lens of the stock market. For it's apparent that once the stock market crashes, especially in flash crashes, most equities and assets crash in what can best be described as a collective and simultaneous save whatever you can panic. And in any such event, neither gold nor Bitcoin are in any way exempt from the widespread fear they come with. And that brings us to the most likely crash outcome for Bitcoin. Are you ready? Okay, good. I bet that headline got you confused. Here's what I think will happen with Bitcoin amidst the next crash, the very one that will plunge us all into economical darkness. First of all, it's by no means uncommon for independent assets and equities to merge together in some sort of a beautifully united top. But when the global stock markets finally collapse from their own weight, they will bring most things down with them, including gold and Bitcoin. at least in the short to mid-term. But this doesn't mean Bitcoin or gold will continue to plummet. Instead, it means that everything will crash to a pivotal point, just like during the Corona waterfalling last year. But once the various markets reach this pivotal point, certain assets will continue with a secular downtrend, whereas other assets and equities will turn and proceed a secular uptrend. This is called a K formation and might be something you've heard of before. A prime example of a K formation is the 2009 pivotal bottom to which all global stocks indices paid visit regardless of their circumstances. This here later proved to be the critical point from which healthy economies initiated their recoveries, again healthy within big quotation marks, whereas the weakest ones such as Greece produce what can best be referred to as bleeding to death. If you merge a strong and a weak index together on a chart, their respective divergences after the initial communal plunge form a K-like shape. This is exactly what I expect from the upcoming crash whenever it decides to surprise us. For as much as I'm certain that Bitcoin will take on the co-role of gold, but from a more technical and practical point of view, there's a strong chance its function as a hedge will come after the critical point of pivot has been reached. That's when Bitcoin will begin its uptrend anew, whereas stocks will not. But here's the thing. This presumed K formation does in fact have quite a deceiving alter ego, one that looks strong but isn't. It's called hyperinflation. And this hyperinflation alter ego may in fact turn into a seemingly double recovery with one immensely steep leg up for Bitcoin and gold and another less steep leg up for stocks. Technically, this would still qualify for a K formation, the only difference being that it's not adjusted for hyperinflation. For once we adjust it, it will still be a K. The Greek index that we discussed earlier is a prime example of what a depression looks like during normal inflation, whereas Argentina, on the other hand, is what a depression looks like during hyperinflation. In this case, stocks go up fast, but not because companies are doing particularly well, they go up because their currency is so quickly devalued. In this case, the Argentinian peso has gone down by 99.6% since 2005. Which practically speaking means that whatever money you would have saved under your mattress would have had 0.4% left of its spending value. Or to put it differently, what would have bought you a brand new Mercedes in 2005 will now buy you a rusty second-hand bike. If we put this in relation to the stocks index, the stock index has over the same period gone up by more than 5,000% or 50x. But adjusted for hyperinflation, it still means the Argentinian stocks index has gone down by 80%. Hence, owning stocks loses the average Argentinian a lot of money. They just lose it slightly slower than if they were to hoard the national peso. Now, to make perfect sense of this all, this here is my point. Once the markets crash, everything will likely go down initially. We're talking stocks, gold, Bitcoin, housing, wheat, coffee, you name it. But once the markets reach a critical pivot point, some assets and equities will continue down, for they will be low in demand, whereas others will be high in demand due to their respective individual properties for storing value. And this is the point at which Bitcoin and gold are likely to shine. And make no mistake, it can take months or even years before that pivotal point is reached. For whatever we are in for is here to stay for a long time to come. But regardless of what, we're likely looking at a big K formation. And if we were to get hyperinflation, which is certainly in the cards, then it may not look like a K formation per se, but adjusted for inflation, it'll be exactly that. That was all for now. Thank you and goodbye.